Hi, everyone, and welcome to this episode of Money Moves. This episode, I want to go over the S&P 600 small caps. You can see they're clearly entering a zone of support. We have the SPY, which is also entering an area of support that we've seen before. The ARK Innovation Fund, which is kind of a growth index, getting fairly close to another support level also. And then we have tech, which did already touch support and looks like it may have retraced a little bit. Then we have IWM, or the Russell 2000, did break through this little uptrend level we had, hit that support and then rejected, again getting close to a buy area that we've seen previously. And then one that I don't talk about very often here, this is the S&P 500 over the M2 money supply, retesting support that it broke through here at the beginning of October. And lastly, we have the put call ratio for the total composite, reaching some pretty high levels that we haven't seen in a while, again indicating that we could be entering a buying opportunity. I've decided I'm not going to go over every single platform this month. Maybe I'll make individual videos for the platforms just so you can see them, but I'll go over my monthly tracker at the end of the video. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Starting off here with the S&P 600 small caps, ticker symbol SLY. You can see we're right at that 50 level EMA and that support level that we engaged here in July and September. This is the weekly chart. And if we do get the bounce here and we go back up to your next level of support, next level of resistance, that would be somewhere around 12 to 13% of upside, which could be quite exceptional. Looking at the longer term trends here, you can see we've been in these channels for quite a while, and we did have engagement with this support line a long time ago here in 2018, as well as 2014. But these lines have actually been going on for quite a while. Back to 2010, engaged here in 2011, was resistance in 2012, all the way up to current prices. So these support levels could be pretty strong, but if we do get a breakthrough here at this support level, the next downside is somewhere around 8 to 9%, and that price point would be somewhere around $87 per share before we get another decent level of support that was engaged pretty aggressively here through 2019 and then demonstrated a small amount of resistance here in 2020. It would seem to me that it's more likely that we'll get a bounce and a retest up to these next levels of support, but understand that there is that potential for downside. Moving over here to SPX, or the S&P 500, you can see here I'm testing out these cycles. You can see fairly accurate here from the top to the bottom of that last correction, back over here to the top of that next run. And so far we're getting pretty close to the bottom of where that next cycle would potentially be. And it looks like there's a nice support level here that we had in October. We're also hitting that 100 EMA, which has been decent support so far. If we do get down to that next level of support from current prices, only about another 1% of downward price action potentially, and that would give you somewhere around 8 to 9% of potential upside going into the start of next year if we did retest that next level of resistance. So far, this channel has been slowing down just slightly. We did have those aggressive moves here all the way through December of 2020. Slowed down slightly here starting in April, but still maintaining this very solid bull pattern. You can also notice here that this most recent correction that we came out of was a little bit more aggressive than some of the ones we saw here through May into June and July. And now we're seeing another very similar correction, but a little bit faster again than what we saw here in October. In my opinion, this is really being driven here by the tech sector, which we will look at a little bit later here in the video. Moving on to the ARK Innovation Fund here on the weekly chart, it's certainly seen a lot of downside, what looks to be around 40% from its very highs, maybe a little more, 42% here, which is a very decent sell-off from recent highs. And it looks like we're finding a little bit of support here potentially, just another couple of percentage points down to that next level of support. And then the upside potential from there is very dramatic, obviously, if we get anywhere near its previous valuations in terms of resistance lines, somewhere around 160% of potential upside if they're correct in their thesis, which could take quite a long time to see those kind of gains, but still very appealing to me at this point. It would come somewhere around the next year of price action based on the previous moves. You can see we had a move similar to this starting in June of 2020, and that took a little bit less than a year, 250 days or so. And if we do get another run like that, I would expect it to take at least as much time, another 250 days, which would put us in August of 2022. But either way, this is looking like a really solid buying opportunity here. If we get a little bit lower here to $87 or $86 per share. Moving over here to the QQQ, you can see we are in very good position in terms of a buying opportunity, getting pretty close to support. You could argue that it even hit support already. You may be a little bit late potentially in terms of waiting for that correction. We did see a little bit of price action right around that 100 EMA last time for a couple of weeks before we saw that big bull run of around 10 to 11%. But it certainly seems plausible that we could get another very strong move here over the next several weeks to potentially 2 months, which would represent 12 to 13%, maybe even 14% of upside if we hit that resistance line. Again, making tech look like a better buying opportunity in my opinion to the S&P 500. It continues to be one of the best performing sectors. Next, we have the Russell 2000. A little bit similar to SLY in terms of looking at these bigger price channels. This is the weekly chart again, and you can see we have all of these very long drawn out price channels, and we've actually broken above them into an area of price discovery. And it seems like we're going to be entering this nice point of support, again, representing a potential 12 to 15% of upside if we do retest those highs. Who knows exactly how long that could take, but if we get a little bit lower here into that $210 price level, I think that's a very solid buying opportunity at support, and we do have that price target somewhere around $245 per share. Next up here, we have SPX over the M2 money supply. This is something that is definitely worth keeping an eye on here. And what this shows is how much of the total amount of money that exists is in the stock market currently. And you can see we had a pretty low historic level here at 0.14, and we rallied all the way up to that historic level of 0.21, which if you go all the way back to 2007, prior to the crisis, that was the resistance point in terms of money in the stock market, which then it tanked all the way down to 0.8, which is a level we haven't seen since all the way back here in 1987. From there, we rallied all the way up through the dot-com bubble up to 0.32, just for some historical context. And now you can see we're getting up to that 0.21 level, where we haven't sustained above that for quite a while, going back to 1997. Not to say that there isn't potential for more upside. We can certainly see a large run of another 45% or so up to the previous highs here. But if we zoom in here, you can see we are getting into that support level at 0.21 after we broke through it, which seems like we're going to continue up to this next level of resistance, somewhere around 12% higher, which could indicate more upside for stocks. Moving over here to the put call ratio total composite for the stock market. Looking back to that retrace here in October, you can see we were at a level of around 0.76. And right now we are well over 1.0, almost up to 1.01, which we haven't seen since all the way back here in 2020, excluding this pretty dramatic upswing we saw. I'm not sure if this is even a real candle necessarily when it's such an outlier like this, all the way up to that 1.5 level, which we haven't seen really since March of 2020 during that really strong down move of COVID. We're well above those recent highs, and it seems like if we get any higher here, that's definitely another indication of a strong buying opportunity. The higher this goes, the more puts are being purchased and the less calls. And any time that the overall stock market is getting a little too bearish, that's usually when the buyers start to come in, or at the very least when the sellers start to dry up. I do want to show you my Robinhood account, and I'll quickly go over Tastyworks also. But understand that everybody is probably losing a little bit of money right now, and I am no exception. We did get all the way up to almost $12,000 here in this account prior to dropping all the way back down to a little bit below 10,500 here, with the lows here recently sitting around 10,334. And you can see some of the stock plays that I have in here. Still bullish on PLTR. Ford Motor has been pretty bullish for me. Then we got silver and some uranium plays in here. But I'm definitely looking to start levering up here. As I mentioned, it looks like a pretty solid buying opportunity for many of the indexes, as well as stocks generally. Next here we have my Tastyworks account. You can see down quite a bit here. Still a little positive on my IRA, but down really strongly on my main account. And some of the plays that I have here have been pretty rough, with NEO being one of the biggest losers, and then URA, another uranium play, being down quite a bit. Otherwise, not too terrible. and I will be looking to enter here in the next week. And I will be looking to enter more stocks here in the next week. Finishing up here with my monthly tracker, you can see stocks and my trading accounts were down here pretty dramatically over the last month. Real estate continues to be a strong performer with Fundrise making some money. Bonds just about flat, maybe a slight uptick here. You can see here with 0.18%. And then we have Lending Club. I continue to make withdrawals there. Cash sitting just about flat. Not investing too much extra cash right here. But trading being down the most. Understand that trading is always going to be down the most. It's the most volatile out of these. But generally, you can see we've been getting a little bit closer here as I continue to improve in my decision making with my trading accounts. Don't get discouraged in these down months. I certainly didn't think this downtrend would come quite as quickly as it did, but it's a good reminder that the market will do what the market does. Let me know down in the comment section what you think of these indices. Is this a buying opportunity, or are we going to see lower prices? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.